Today, we're tackling something absolutely crucial if you're looking to build a real short-term rental business, not just, have an STR hobby on the side.
Right.
We've got some great source material here from a listener who's basically asking, how do I set up my STR business properly right from the get-go?
Yeah, and this isn't the glamorous stuff
Yeah.
like picking out furniture or writing, catchy listing descriptions. This deep dive is really focused on the essential, often kind of overlooked legal and financial foundation.
Exactly.
We're talking choosing your business entity, setting up the right bank accounts, the financial systems, the plumbing, basically.
That's a good way to put it. So our mission here is to unpack these sources and give you a clear roadmap. Think of it like getting your legal armor sorted and your financial engine built before you even list the place. The goal. Help you dodge those common painful mistakes like lawsuits hitting your personal bank account or just having such messy books you can't even tell if you're making money.
Which happens a lot.
Yeah, so instead you get protection, you get organization, and honestly just confidence. Because skipping the setup, rushing through it, that's planting seeds for major headaches later.
It really is the bedrock. I mean, before you list anything, before guest number one walks in, getting this foundation right, it's just non-negotiable.
Yeah.
For safety, sure, but also just for being profitable long-term and being able to scale.
Okay, so let's lay that groundwork. Why does taking the time for the setup stuff actually matter so much? What's the real benefit?
Well, at its core, it's really about creating a clear boundary, right? A legal and financial wall between you, the person, and your STR business.
Okay.
When you do that right, you're protecting your personal assets, your money, your house, car, whatever, from things that might go wrong with the business. And it forces you to be organized, which is just critical for knowing how you're doing and if you can grow.
And the flip side, if you don't do this right, what are the real world consequences we're talking about? That's where it gets pretty risky. Say a guest gets hurt on your property, or there's some big damage, or any kind of dispute that leads to a lawsuit. If your business isn't set up as a separate thing, you personally are exposed. They could potentially come after, everything you own personally. And beyond just the legal risk, you end up with this tangled mess of personal and business money. It makes tracking income, expenses, profit just incredibly difficult. It leads to tax confusion, raises your audit risk, and honestly, it just creates constant financial stress.
Okay, scary stuff.
Yeah.
Let's unpack the first big piece then. Choosing your business structure. We saw this analogy used. It's like picking your armor for battle.
Yeah.
Different structures, different protection levels.
That's a great analogy. Yeah, the structure you pick determines how legally separate you are from the business, and that dictates how much protection you have if things go sideways.
So the simplest, maybe the default option, is the sole proprietorship. But the sources seem pretty clear. Avoid this for STRs.
Yeah.
Why is it such a bad fit? Well, a sole prop is basically what happens if you just start doing business without setting up anything formal. Legally, you are the business. There's zero distinction.
None.
Absolutely none. And for an STR, where you've got guests coming and going, potential property issues, the liability risk is just inherently higher than, say, being a freelance writer working from home.
Right.
So having no legal separation, it's just incredibly dangerous. If the business gets sued, you get sued personally, your personal bank accounts, your car, your house. It's all potentially on the line.
Yikes. Okay, definitely not the armor you want. What about title holding trusts, sometimes called land trusts? How do they play into this?
Land trusts are a bit different. They offer protection mainly around the ownership of the property itself.
Ah, okay.
It's a legal setup where the actual title to the property is held by a trustee, could be a third party, kind of anonymously, on behalf of you, the real owner. The main benefit is keeping your name off the public property records. Gives you some privacy.
So privacy is key there.
Yeah, privacy, and it could shield the property asset itself a bit. It doesn't replace a business entity for the operations, like the renting activity, but it can be an extra layer, especially for the real estate. And it can sometimes make transferring ownership smoother down the road.
Okay, interesting layer for the property itself. Moving on to what seems like the main recommendation, the favorite for most STR folks. The LLC, the limited liability company. What makes this the go-to?
Well, the name kind of says it all, right? Limited liability. Its whole purpose is to create that legal shield between your personal life and the business's debts or legal troubles.
The separation we talked about.
Exactly. If your LLC gets sued or runs into financial problems, generally, only the assets owned by the LLC are at risk. Your personal savings, your family home, your personal car, those are typically protected. It offers that strong defense a sole prop just doesn't have.
Makes sense.
Plus, it's pretty flexible on how you can choose to be taxed, which is a nice perk.
Right. Speaking of taxes, the term S Corp pops up. Is that a totally different structure again?
No, and that's a really common point of confusion. An S Corp isn't actually a business structure like an LLC is. It's a tax classification.
Oh, okay.
It's something you can elect with the IRS for your existing LLC, usually once your business is making pretty steady, decent income.
And why would you do that?
The potential benefit is lowering your overall tax bill. With an S Corp election, you can pay yourself part of the profit as a reasonable salary, which is subject to payroll taxes like a normal job, and the rest is distributions, which generally aren't subject to self-employment taxes.
Okay, so it could save you on taxes.
It can, yeah. But it also adds complexity. You have to actually run payroll for yourself, file different forms. It's usually something you consider when the potential tax savings outweigh the extra admin hassle.
So maybe not for day one, but something to look at later if you're profitable. What about the C Corp? Is that relevant for most STR operators?
Almost certainly not. A C corporation is generally for much larger businesses. Think companies planning to get outside investors, maybe go public someday, or ones with really complex ownership.
Got it.
It has its own corporate-level taxes, more complex rules. It's usually way overkill, unless you're really building a massive multi-state hospitality brand and looking for, like, venture capital funding.
Okay. So let's recap the structures then. Sole prop, huge no for STRs, zero protection. LLC seems like the clear winner for most operators, gives you that liability shield. Land trust, more about property privacy and asset protection. S Corp, a tax choice for profitable LLCs, not a structure itself. C Corp, probably not relevant unless you're building an empire.
That sums it up pretty well.
And the absolute key takeaway here seems to be talk to a professional, a CPA or an attorney who understands STRs.
Absolutely critical.
Yeah.
They can look at your specific situation, your income goals, where you're located, your risk tolerance, and give you tailored advice. Generic info is helpful, but getting this wrong up front, that could be a really expensive mistake later on.
All right, so you've talked to the pros, you've picked your structure, probably an LLC. Step 2 is making it official, right? Registering the business, what does that usually involve?
Yeah, this is where you actually create the legal entity. You take that armor you picked and formally put it on in the eyes of the state.
And the steps are fairly standard.
Generally, yes. First up, pick a business name. You got to make sure nobody else in your state is already using it. Usually a quick search on the Secretary of State's website.
Okay, name secured. Then you need a registered agent.
Yep, that's a legal requirement. It's basically the official point of contact for your business in that state. They need a physical street address there to receive legal papers, official mail from the state, that kind of thing.
Can that be you?
Often, yes, you can be your own registered agent if you live in the state and are generally available during business hours. But a lot of owners use a professional registered agent service. It gives you more privacy, means you don't have legal papers served at your home, and ensures someone's always available even if you travel.
Makes sense. Okay, name, agent. Then filing the paperwork.
Right. This is the core step. For an LLC, you file what's usually called the Articles of Organization with your state's Secretary of State office or whatever the equivalent agency is called.
Oh, there's a fee for that.
Correct. And it varies wildly by state. Could be $50, could be several hundred. Just depends where you are.
Got it. And the last piece is getting your EIN from the IRS.
Super important. The Employer Identification Number, or EIN. Think of it as your business's social security number. You absolutely need it to open business bank accounts, hire anyone down the line, and file your business taxes.
Is that hard to get?
Nope, it's free, and you can apply online directly on the IRS website. Usually takes just a few minutes once your state registration is approved.
Okay. And there was a point about operating in multiple states, too.
Yeah, good point. If you start expanding and running STRs in states other than the one where you initially formed your LLC.
Like your home state.
Right. You'll likely need to register your existing LLC in that new state as well. It's usually called registering as a foreign entity. It's just another compliance step to keep track of as you grow across state lines.
Okay, structure chosen, registration done.
Yeah.
Now let's talk money. Step 3, opening business bank accounts. This was called out as a real game changer. Why so important?
Oh, absolutely. If there's one single financial mistake that trips up so many new business owners, it's mixing personal and business money in the same account.
Just throwing it all together.
Yeah. It instantly creates a giant mess. Makes it impossible to really know if your business is profitable, makes budgeting a nightmare, and critically, it can actually undermine that legal separation you just worked hard to create with your LLC. They call it piercing the corporate veil.
Ah, so it weakens your protection.
Exactly.
Yeah.
So separate business bank accounts, absolutely non-negotiable.
And the suggestion was to go beyond just one checking account, maybe use a system, RelayFi was mentioned, to create different sub-accounts.
Precisely. Instead of just one big pot of business cash, using a platform like RelayFi lets you easily create multiple dedicated buckets or sub-accounts within your main business banking. Each one has a specific job.
And that connects to a specific money management method.
Yes, it makes implementing the profit first method incredibly practical.
Okay, profit first. What's the core idea there?
Or the traditional accounting formula is income minus expenses equals profit, right? Profit is what's left over.
Yeah, seems logical.
Profit first flips that on its head. It says income minus profit equals expenses. The core idea is you proactively allocate a percentage of your income to profit first before you pay any bills.
Oh, interesting. So you prioritize the profit.
You prioritize profit and
Yeah.
you prioritize paying yourself and setting aside taxes. Having those dedicated sub-accounts makes it real. You're not just hoping there's money left. You're actively directing it where it needs to go right away. It builds those priorities into your cash flow system.
That sounds way less stressful than scrambling for tax money later. So what are the kinds of sub-accounts the sources suggested setting up?
Based on typical STR needs, you'd likely want something like this. First, an income account. This is where all the money lands initially. Guest payments, payouts from Airbnb or Vrbo, whatever. It all goes here first. Then a profit account. Right away, you transfer a small percentage, maybe start with 5%, maybe 10% of everything that hits the income account into this profit account. This isn't for bills. It's your business's actual retained earnings. Think of it like a bonus you pay yourself periodically. Next, an owner's pay account. This is crucial. You decide on a reasonable, consistent amount to pay yourself, like a salary, and transfer that money here regularly. It ensures you get paid and helps you budget personally. Definitely a tax account. Non-negotiable. You need to funnel a good chunk, often 15% to 30%, depending on your situation of your income into this account. This way, the money's just sitting there waiting when quarterly or annual taxes are due. No more panic. And operating expenses, OPEX account. This is your main workhorse account for paying the regular bills, cleaners, software fees, supplies, utilities, minor repairs, and maybe an optional but smart repairs and reserves account. A place to slowly build up funds for bigger unexpected repairs or planned upgrades like new furniture, or just to smooth out cash flow during the slow season.
Wow, okay. That sounds really organized. And the real magic seems to be the automation part. You don't have to manually move money around all the time.
That's the beauty of using a platform designed for this. You can set up automatic transfer rules like maybe every Friday or twice a month. The system automatically sends 5% of the income balance to profit, 20% to tax, your set amount to owner's pay, and maybe the rest stays in OPEX or a portion goes to reserves.
Set it and forget it, kind of.
Exactly. The system enforces the discipline for you. It takes the guesswork and the stress out of managing the money flow and gives you incredible clarity. You always know how much you have allocated for each purpose.
Okay, bank accounts structured the profit first way. Step 4 then is connecting those accounts to your accounting system. What's the goal here? Why is this link important?
This step is all about getting that financial data, all those transactions happening in your different bank accounts, flowing smoothly into your bookkeeping software.
So you can track everything properly.
Precisely. You want one central place where you can accurately categorize all your income and all your expenses, generate reports, and really understand the financial health of your business.
And there are different software options mentioned.
Yeah, a few popular ones came up. QuickBooks Online, often called QBO, is kind of the standard for many small businesses. Very robust features. Good if you plan to work with a bookkeeper or accountant.
Okay.
Xero is another strong cloud-based option, known for having a cleaner interface, maybe a bit more user-friendly for some. And then Wave Accounting was mentioned as a good free option, especially if you're just starting out or have simpler needs.
Free is always nice.
It is, but the key is picking one that fits your needs now and maybe where you see yourself going, and then using it consistently.
Right. And how do you use these tools effectively, especially if you have, say, multiple STR properties? How do you track them separately?
Yeah, that's a really important feature in most decent accounting software. You can typically set up what's called classes or locations within the software. You'd create one for each individual STR property you manage.
Okay, so property A is one class, property B is another.
Exactly. Then, as transactions flow in from your linked bank accounts, whether it's rent income, a cleaning fee payment, or a bill for repairing the dishwasher at property A, you tag that transaction to the correct class or location.
And why bother doing that? What's the payoff?
The payoff is huge. It means you can easily run profit and loss reports by class or by location.
So you see exactly how each property is doing individually.
Precisely. You can see which property is bringing in the most revenue, which one has the highest expenses, and crucially, which one is actually the most profitable. It gives you incredible insight into what's working well and maybe which property needs more attention or different strategies. It moves you from just guessing to having hard data.
That sounds incredibly valuable. And there was a bonus tip about keeping the accounting clean. Something about reconciling.
Yes, absolutely essential. Reconcile your books every single month. Don't let it slide.
What does reconciling actually mean?
It means systematically comparing the transactions recorded in your accounting software for a given period, say the month of May, against the actual bank statement for that same account for May. You check off each transaction to make sure everything matches: deposits, withdrawals, checks cleared.
Why is that so critical?
That helps you catch any errors. Maybe you entered something wrong, maybe the bank made a mistake, maybe a transaction got missed entirely. It also helps spot any potential fraudulent activity quickly. Plus, regular reconciled books are fundamental for accurate financial reports and, honestly, for keeping your business looking legit and audit-proof.
Okay, makes sense. We've covered structure, registration, banking with profit first, and linking to accounting software. Step 5 reminds us this isn't just a set up and forget it thing. It's about staying legal and compliant ongoing, right?
Exactly right. Getting set up is the foundation, but you have to maintain it. It's like ongoing maintenance for the business's legal and financial health.
So what are some of those regular compliance tasks we need to keep in mind?
Well, you'll usually need to renew your business entity, your LLC, for instance, with the state periodically. Often it's an annual thing. The state will typically send you a notice about when and how to do that. Often involves paying a renewal fee.
Okay, annual renewal. What else?
Just keeping your important business documents organized and accessible. Things like your EIN confirmation letter, your articles of organization, your operating agreement if you have one. You need to know where these are.
And local rules can pop up again here.
Definitely. You need to check with your specific city and county. Many places require STR operators to get a separate local business license or permit, sometimes specific to short-term rentals. You got to find out what your local requirements are and make sure you have the right licenses and renew them as needed. Ignoring these can lead to fines or even being shut down.
Right. And STR-specific taxes seem like a big ongoing thing, too.
Oh, yeah. Huge. Beyond your regular federal and state income taxes, most areas with tourism impose specific taxes on short-term stays, often called occupancy tax, hotel tax, transient lodging tax, lots of names.
And you have to handle those.
Yes, you are generally responsible for collecting the correct amount of this tax from your guests. Usually it's added to their bill, and then remitting it, paying it over, to the correct city or county tax authority on their required schedule, which might be monthly or quarterly.
How do you figure out what those taxes are?
It can be tricky sometimes. Using resources like AirDNA, checking your local government websites, or connecting with a local STR or host association can really help clarify the specific rates and rules in your particular area. Some platforms might collect and remit for you in some places, but ultimately the responsibility is yours to make sure it's done correctly.
And all that careful tracking of income and expenses we talked about with accounting software is crucial for taxes too, right?
Absolutely. Not just for filing your annual tax return, but often for making estimated tax payments throughout the year. If you're operating as an LLC or sole prop, you'll likely need to pay estimated federal and state income taxes quarterly based on your projected profit. That tax sub-account we talked about, that's where this money comes from.
Got it. Any other final tips for staying compliant day to day?
Just general good bookkeeping habits. Keep records of all your expenses, scan receipts digitally if you can. If you drive your car specifically for business purposes related to your STRs, like going to check on a property or buy supplies, track that mileage. It can be a deduction. Leverage your accounting software. Stay organized.
And there is a pretty direct warning tied to all this compliance stuff.
Yeah, the sources made a point that STR businesses, maybe because they're newer or involve real estate and hospitality elements, can sometimes attract more scrutiny from tax authorities than other small businesses. The phrase used was, they get audited more than you'd expect.
So dotting the I's and crossing the T's is really important.
It really underscores why setting everything up correctly from the start and maintaining diligent, accurate records isn't just, nice to have. It's essential protection against potentially serious problems down the road. Play it smart.
Okay, so stepping back from all these detailed steps, choosing the entity, registering it, setting up those smart bank accounts, linking the accounting, staying compliant, what's the big picture? What have you actually built by doing all this?
You've essentially built a business with a solid, professional, and defensible foundation.
Which means, number one, you've protected your personal life, your personal finances.
Absolutely. You've created that crucial legal barrier between business risk and personal assets.
Number two, you've proactively set yourself up to stay out of trouble with the IRS and local tax authorities.
Yeah, by tracking everything properly and ideally setting aside the funds needed for taxes as you go.
Number three, you have incredible clarity on your business's money.
Right.
You actually know where it's coming from, where it's going, and how much is allocated for profit, pay, taxes, and expenses.
That financial visibility is just incredibly empowering. It lets you make informed decisions instead of flying blind.
And maybe most importantly, number four, you are positioned to grow with confidence because the administrative back end, the financial plumbing, it's organized, it's legitimate, it can handle more volume.
Exactly. You've shifted from potentially operating what could be seen as a risky hobby to running a structured, organized, and much safer business.
So the core message seems simple, but really profound. Investing the time and maybe a bit of money to get this set up right from the very beginning just makes everything that follows, managing guests, marketing, scaling, significantly easier and safer for the long haul.
It truly does. It sets the stage for sustainable success, not just short-term cash flow.
So, as you're thinking about starting your STR journey or maybe even cleaning up an existing operation, here's something to chew on. How does implementing a disciplined financial system, maybe like that profit first approach using dedicated bank accounts, do more than just organize your money? How might it fundamentally transform your relationship with your business's finances? Does shifting from just seeing rent collected, actively allocating funds for profit for your own pay for taxes first, does that change your mindset from being just a property manager to being a true business owner focused on building wealth and long-term resilience?
Walter is actually offering to help you, the listener, get a handle on this financial piece, specifically with RelayFi.
Oh, extending that help offer again.
Yeah, he's offering a free 45-minute Zoom call. He'll literally show you exactly how he's set up and uses RelayFi.
That's generous. He mentions it took him, 45 hours to figure out his whole system?
Right. He says he can save you all that trial and error, walk you through it in just 45 minutes.
And you get the recording afterwards, too.
Yep, he sends you the recording of the call. Super useful to refer back to.
Okay, so how do people take him up on that?
Same contact info as before. Text him at 601-813-4661 or shoot him an email at walterwofford@gmail.com. Critically, make sure the subject line is just help.
Got it. Text or email, subject help.
Walter's story really hammers home how valuable it is to learn from those failures, but also how finding tools to automate things, especially finances, can just massively cut down on stress.
Yeah, freeing up mental energy.
It really makes you think, doesn't it? What are the biggest friction points or time sucks in your own business or even personal finances? And how could maybe identifying and automating those free you up to focus on growth? Or maybe even help you skip some of those painful early mistakes Walter went through?
That's a great question to ponder. Where can automation remove the stress and let you focus on what really matters?